Hello, everyone, and welcome to today's webinar, PPP 1, 2, and U, Understanding the Latest SBA Rules. I'm Yonina F, Shineweather, CPA, the Consulting Director of Compliance at Viventium, and I kind of feel like I should be saying welcome back, because just last Thursday, many of us, and I recognize the names as you're coming on, many of us were in this space looking at the initial analysis, shall we say, of the Consolidated Appropriations Act that had been signed into law by President Trump on December 27th, its effect on the Employee Retention Credit, on the Paycheck Protection Program, and anticipated changes and guidance that SBA was going to issue. And really, as we went to air right before that webinar, the SBA issued guidance regarding the reopening of the PPP program, Paycheck Protection Program. And at that time, we said we were going to regroup and actually discuss the real forms, the actual application process as it unfurls, and it has unfurled. The application and the program were both open yesterday. And what we're here to do today is to go through box by box, step by step, loan by loan, what you have to do to take either an expanded PPP loan on first draw, or perhaps a second draw loan, or perhaps for those of you who haven't even borrowed from SBA at all, a total first draw loan. And that's, there's a lot of terms, a lot of changes, and a lot of stuff that's staying the same. So I think that's really what we're going to comb out today. What do you do to get the maximum loan that you can get? Just a little housekeeping before we get started. I do want to mention that today's presentation is being recorded, and both the recording and the slides will be available for our participants, and you'll be receiving them at the end of the webinar. I also want to encourage you to use the question toolbar, and I see that I'm already getting some questions and very good ones being asked. I will keep my eye on the questions as we go along. I will also try to leave some Q&A time at the end, because I want everyone really to come away with as deep an understanding as they need in order to get done what they need to get done. Now, one of the first questions I was asked was that for the Viventium clients with us today, will Viventium be providing an average monthly payroll cost report in order to go for a second draw loan? And the answer is definitely. And that will be released in the upcoming days. And of course, everyone's waiting for that. But there's information that even if you're not with Viventium, there's information that you can use and steps that you can take in order to make sure that you get your applications in there. As we know, unfortunately, time is of the essence, and as we've seen, the program does have the capability, shall we say, of running out of funds. And so it's advisable for us to all be as expeditious about this as we can. Because of the rapidity and just the speed that everything is happening right now, I want to stress this disclaimer, and that is that guidance and information is still evolving. I've actually been out there and I've seen from some of the major informational bureaus some big misinformation. I've seen some misstatements, and when you go back to the interim final rules, what they're saying is not correct. And I'm not really trying to blame anybody. What I'm just saying is things are happening very fast. And I don't even think SBA themselves have really had time to fully analyze their information. And even the way the whole law was written, I wouldn't be surprised if we have some type of a Technical Corrections Act issued by Congress sometime into the new administration. So everybody is just kind of like buckling their seatbelts and trying to hold on and flow and run with everything as fast as possible. And because of that, of course, I just want to remind everyone that nothing that is being said today should be taken as the final word on PPP loan applications or forgiveness. All financial decisions should be made in consultation with your CPA, your tax advisor, or your legal counsel. Viventium is not an SBA authorized lender and does not take any position or provide any advice with respect to guidance from SBA or otherwise. So that's the small print. Now, I think there's some confusion about what is exactly available out there. There are three categories of loans that are available on what we might call the second round of PPP. And I want to distinguish between second round and second draw. There was a first round of PPP that was authorized by the CARES Act, passed into law on March 27th, 2020. That is what we're going to call the old loan, or the old round of loans. And now, under the new Budget Act, which has many, there was as we spoke about last time, there was the Thursday webinar is also archived. And those of you who want to find it can go to viventium.com under webinars, or you can just send an email to with you, any of the Viventium team will be happy to provide that to you. But as we described last time, there's this huge mammoth act called the Consolidation Appropriations Act of 2021, and that contained many smaller acts. And one of them is the Economic Aid Act. It's actually a longer name, but for sake of convenience, we'll just call it the Economic Aid Act. And that extended or reopened the PPP program and expanded it. So we have the old loans that were authorized back in March. That program, the old program, closed on August 8th, 2020. They're off the books. However, under the Economic Aid Act, new loans were authorized. $284 billion of funding was appropriated for it. And 3 types of loans, 3 categories, if you will, were now created. And they are as follows. Your first loan type on your chart are first draw initial loans. Those of you, and you can click your hand raiser if you'd like to just indicate. I don't necessarily see who it is. I just see that someone has their hand up. Those of you who have not taken any loans at all from SBA, for whatever reason, either you weren't qualified. Under the new law, a whole laundry list of new types of employers become qualified. Some media outlets that might have been disqualified because of affiliation with larger groups, some of those will be newly qualified. Housing cooperatives, 501c6, not C3, they were already in there, but 501c6 organizations, farmers, ranchers, so many types of employers and entities that were not eligible under the original, the old loan program, are now newly eligible, and they're entitled to take a first draw initial loan the first time around. Or there may have been employers who were just a little bit apprehensive. They heard that they could possibly be held liable for claiming funds when they didn't have a necessity to claim them, and they were hesitant. And now they've either reached the point where they just really need the money, or they feel more confident. They hear that SBA is reaching out to smaller businesses, minority-owned businesses, and they've decided, yes, we're going to go for it. For our first time, we're going to take a loan. We didn't make it in the first program, which closed on August 8th. We're going to go for the new program, and those would also be first draw initial loans. First draw initial loans are available up to a maximum of $10 million for a single loan, if that's of course, what the numbers indicate, but that's the cap on it. Who can apply for these first draw loans? So anybody with 500 employees or down, and if you are in the NAICS category, that's the North American Industry Classification System, which is industry codes, basically 72. 72 is accommodations and food services. If you're in a 72 code, if that's what you put down on your income tax return, your corporate return, then it's 500 employees per location. That's nice. That's trying to expand it because these are particularly hard-hit industries. There's certain other exceptions in the SBA rules, but basically it's for employers of 500 employees or less. And those first draw loans are open. The loan program started on Monday, January 11th, but not from all banks, not from the large commercial lenders, only from the smaller community lenders. The idea was to try to spread the availability of these funds to smaller or underserved communities, and to reach out either in the more rural areas or minority-owned businesses and give them an opportunity to get access before everyone in big corporate America jumps in, to kind of get your mom and pop kind of businesses, access to those loans. So for the initial process, it was only the community lenders that were allowed to write these loans. And for Monday and Tuesday, yesterday and today, only first drawers, only people who had never gotten a loan before, have access to these loans. Now, starting tomorrow, the second type of loan will be available, and that is those people who have applied before for a first draw loan and now want to reapply, we'll discuss that why in a minute, or if you have already gotten a loan, a first draw loan, but you want to increase the amount, and we'll call that, just for sake of convenience, PPP1 plus. Okay, and those loans, again, are up to a total of 10 million, but that's including your original amount. So now, who might want to get this? There were employers who applied for loans and received funds. They received a disbursement and then returned loan funds, either some of their funds or all of them. They may have gotten scared off at the beginning when SBA said they were going to prosecute people who took loans that when there was no necessity or justification, and they gave a deadline that as long as you return the loans by a certain date, we're not going to prosecute. Well, some people, usually the more innocent ones, responded first, and they just got nervous and they gave the funds back. And now that the dust has settled and there's more knowledge, at the beginning there was a lot of confusion back in March and in April. Now that there's more knowledge about what this program is and who is entitled, they say, oh, it's such a shame we gave that money back. Like, we really could have used it. We were entitled to it. Why did we have to chicken out and do that? So you get a second chance. You can reapply for, and it's not called a second draw. It's still, even though you applied before, but you got it and you gave it back, now you can reapply for a first draw loan. Or let's say you applied and you got a loan, but now under all these new rules that have been issued under the Economic Aid Act, you see that you're entitled to an even higher amount because additional expenses, and we're going to talk about that, I'll give you a list of the additional expenses that are now allowable under PPP and forgivable, and they're going to turn into a grant. And you can go back and say, wow, I spent all that money out of my pocket. I can now get a loan for it. Let me go for it. I want to increase my loan amount if I had only known. So you have a chance to do that. You can increase your loan until it reaches the cap of $10 million, if that's what you're qualified for. Who is allowed, who is a qualified borrower to get either a reapply or to increase their amount? Well, first of all, it has to be someone who did not receive forgiveness by December 27th, in other words, prior to the date of the signing of the law. Now, that's great news because that means if you just got a forgiveness decision based on an application for forgiveness that you had submitted between December 27th and now, you can still go back and you can still increase the amount of your loan. As long as you didn't receive forgiveness, the other way, if you didn't receive forgiveness by December 27th, right? If you received forgiveness already on December 26th, well, sorry, then you're kind of stuck and that doesn't help. You're finished. You might still be able to go for a second draw, but your first draw is finished. If you have received forgiveness before December 27th, then this doesn't apply to you. I would imagine that the majority of our participants today are here because you did not receive forgiveness by December 27th. So you may want to consider increasing your first draw. And the question is, though, what does it pay to do? Does it pay to increase your first draw or to go for a second draw? Well, the answer is it depends, and it's not a decision that I'm going to be able to make for you, but I can give you some information that you can help discuss with your tax advisors. You can't get a disbursement of a second draw loan. Notice you can apply, but you can't get that disbursement of the second draw loan till you've used up all your funds from your first draw. So if you increase your first draw, it may take you longer to use up those funds. And by the time you get around to applying for a second draw, it may already be after March 31st. All loans, all three categories close on March 31st as of now, unless the new Congress, new administration will extend that. But right now, this new PPP extension, it closes on March 31st. So you might say, well, it doesn't pay for me to increase my first draw. I'll just go right now, jump in for the second draw. But keep in mind, on the other hand, that your second draw is limited to $2 million. And if you have enough of these expanded expenses that you could get perhaps $2.5 or $3 million, then you may want to say, no, I'm just going to apply for an increase of my first draw loan. So as you can see, there are many different variables and there's some cost benefit analysis you need to do here when deciding which way it pays to go. But in any case, starting tomorrow, those, actually, no, this one is already started yesterday because it's still under first draw. So a reapplication or an increase is already open, but again, just from the smaller community lenders. Now, starting tomorrow, Wednesday, the 13th, The community lenders will start granting the third category of loans, and that is your PPP2, as they've been dubbed, your second draw loans. Those are the ones that only go up to $2 million. You can only get them if you have used up your first draw funds, and only if you've used your first draw funds for eligible expenses. We'll talk about what those are. Not if you just say, well, let me just run out and, you know, it just use up those funds so that I can go for a second draw. It has to be still on eligible expenses. The qualifications for second draw are stricter. If you've taken a first draw and you've used up all the funds, you can only get a second draw if you have 300 employees or less, not 500. You have to be smaller. The idea is this is to benefit smaller businesses. And again, you have that leniency if you're in the NAICS category of 72, food service or accommodation. It's 300 per location, not 300 total. And there's a new requirement that in order to get a second draw loan, you have had to experience a 25% decrease in 2020 relative to 2019. And we'll zoom in on that decrease and we'll try to define it, because what if you weren't in business for the full 2020? What if you weren't in business for the full 2019? And all of this is contained in the new guidance. So we're going to be looking at that. So those are the three basic requirements. You have to be 300 employees or less, 25% decrease, and fully use your funds. And of course, you have to be able to, you know, establish necessity, which the 25% decrease will probably do. Those loans are going to be available from the smaller community lenders starting tomorrow. And SBA has said that shortly after, I'm not quite sure how shortly after is, but perhaps next week, Monday's a holiday, perhaps, you know, speculating, perhaps next Tuesday, all lenders, even the larger commercial banks, will be granting all three types of loans. So it remains to be seen, you know, how soon it will be opened to the general public and to the general lending community. Those are the three categories of loans. The SBA guidance, just for your reference, and as I mentioned, you will be getting these slides. Here you have the links. There were basically, there was a mandate by Congress that the SBA must issue guidance on this new expansion within 10 days of the passing of the law, or of the signing of the law, which was on December 27th. So basically, SBA had until January 6th to issue guidance, and they made it late Wednesday night last week. They did issue the guidance, 82 pages on first draw loans, you have a link there, and 42 pages on second draw loans. So let's digest that and start to take a look at these changes. There are 5 basic changes to forgiveness. Question is, which changes apply to which loans? And if you remember last week, those of you who were here, we had some questions because we knew that the changes apply to all second draw loans. But we said, what if you already have a loan, a first draw loan? Well, if you receive forgiveness, too late, changes don't apply to you. We had a question though about that gray area. What if you had sent in your application? You were really, you know, you were on the ball, you sent it in for forgiveness, but you hadn't yet received a forgiveness decision. The forgiveness amounts weren't remitted to your lender. So the interim final rule, the guidance issued by SBA last Wednesday, clarifies that even if you've applied for forgiveness, as long as you haven't received forgiveness yet, these changes can apply to you. And that's good. That means you can get, if you haven't been able to get full forgiveness, it's much more likely that you will, because additional expenses are now being allowed. And certainly if you haven't applied for forgiveness yet, then these changes apply to you too. Okay, so this is important. Now, the guidance also specifies that only businesses that were in operation prior to February 15th, 2020, that's kind of being dubbed as the outbreak of the pandemic date, only businesses operating before 2/15/2020 qualify for loans, any kind of loans. You can't go for any loans now unless you were in business prior to February 15th. So those are the application of the changes. Now, without further ado, let's jump in and look at the application, because you'll see a lot of what I'm saying now is a little bit up in the air and you know, theoretical. When we start to look at the application, I think you'll see how all of this kind of gels and comes together. So this is form 2483. That's the number of the application form. I'm not sure if that number appears anywhere on the form, but it is form 2483. Some of your lenders, I don't know if you were following, but some lenders were doing what was called a pre-application, where they were asking people who thought they would go for a second draw or even for a first draw or an expanded first draw, they were asking them to fill out basic application information so that it would be on file and put them ahead of the line in lining up to get these funds. So if you did that, you're ahead of the game. But if you didn't do it, you do want to reach out to your lender and, and make sure that if there's anything you can do now, even if they're a commercial bank, even before they're authorized to open up the program, perhaps there's something you can do now as a pre-application to get in line more quickly. So this is the 2483. It looks pretty similar for those of you who did the loan already to what we saw back after the CARES Act. It's about a half-page worth of data and then lots of questions and a second page of certification. What we want to do is zoom in on the data portion. And we have some Viventium superimposed explanation here, but we're going to start running through it. First of all, in your upper left-hand corner, you have checkboxes. And if you want to compare back to your original loan application, you will see that there are additional types of employers who now qualify: veterans organizations, housing cooperatives, 501c6 organizations. There's a whole slew of new businesses, new types of businesses that are eligible for these funds. And so this form, which is revised January 8th, allows them to participate as well. And you just have some basic information: your DBA, year of establishment, if you're a sole proprietor or a self-employed individual, year of establishment, you would just put NA, and that doesn't really apply. Your NAICS code, of course, is crucial because that will determine the threshold for eligibility, and it will also, as we will see, determine for second draw loans the amount of your loan, and we'll talk about that when we get up to the second draw application. Here's where you're going to indicate if you have the 500 threshold, the 300 threshold, any other exceptions of SBA apply to you, and your address. Now we get down to the most important box, and that is average monthly payroll. And as I mentioned, Viventium provides this data to our clients, and I'm sure those of you who are using other software packages or payroll providers, I'm sure you're reaching out to your payroll partners to make sure that they're going to be able to give you this is payroll information. This is something you should be getting from your payroll partners. Average monthly payroll means, as it says, the amount that you pay to all of your employees on a monthly basis during the look back period. Now, the original application had said you were supposed to use 12 months going back before the date of your application for the loan. Most employers interpreted that as the beginning of 2020, so most employers didn't actually count back 12 months. They just said, we're going to use calendar year 2019, and the SBA went for that. Okay, fine, use calendar year 2019. Now you have the option under certain circumstances of still using 2019. In other cases, if you're applying for a loan in 2021, you're supposed to be using the 2020 year. This is not yet clear enough. In the instructions to this form, SBA says use 2019 or 2020. In the interim final rule guidance that's been published, it's a little bit fuzzier, and it makes it sound like, well, not too clear. When can you use 2019? When can you use 2020? We're hoping that SBA will release additional guidance. It'll probably be in the form of an FAQ, as that's what they've been doing, and clarify more. At this point, for those of you, I would definitely say do not wait. Do not wait to submit a loan application for anything, for any information. Get it in, get your place in line. Now, how do you know what to use as your look back period? Talk to your lender. Talk to your SBA authorized lender and ask them, should you be using 2020? Do you have the option of using 2019? It's not so clear yet from the instructions for the guidance. Is it up to you? Is it based on something else? Talk to your tax advisor and your lender. But whatever you do, don't wait. Don't like sit back and wait for the FAQ. It just doesn't pay. Just get some information, even if you just get yourselves, even if you could, and at this point, probably you want to take the number that's more favorable, 2019 or 2020. But yeah, do try to verify that. Now, what if you're seasonal? What if your summer is your high season? What if winter is your high season? What do you do? So there is a provision there that you can use any 12 weeks, as long as it falls between February 15th of 19 and February 15th of 2020. You pick the 12 weeks that's best for you, highest, because this is what your loan's going to be based on, and you can use 12 weeks. What if you're a new business? So the instructions provide that you would use the average monthly payroll during the period of January and February 2020. Now, what if you weren't in business before? Well, remember, you can't get a loan if you weren't in business before February 15th of 2020. So, okay. Whatever it is, you take that out. Oh, and by the way, here's the catch. You can only count the annualized equivalent of $100,000 per employee. Again, this is something that Viventium would automate for you. But if you're doing this on your own, you have to look at whatever period you're working with. So if you're working with a full year, so it would be 100,000. Once someone crosses $100,000, you can't count the rest of their compensation. Only up to 100,000 per employee. They're not looking to enable you to pay what's considered high salaries, and so therefore they're only allowing you to count in your loan amount up to 100,000 per employee. Of course, if you're using a shorter period like 12 weeks, then they're going to want you to prorate that 100,000. It would be the 12-week equivalent of the 100,000 per employee. Once you get that number, you multiply it by 2.5, and you add in any economic injury disaster loan amount, but not the advance. The advance does not have to be repaid, does not get added in here. That is going to equal your loan request amount. Okay, and when we talk about an economic injury disaster loan, when we say to add in those amounts, it's an EIDL that you received. Dates here are kind of weird, but that's what they say, between January 31st and April 3rd of 2020. So for those of you who got the EIDL, you want to pay attention to those details. The next column asks for number of employees. Okay, number of employees, don't get uptight about this. This is not FTEs, and you say, well, should it be part-time, should it be full-time? Basically, the SBA wants this for statistical purposes. They want to be able to say that SBA has granted X billion dollars in loans to employers with an average employee size of whatever. Basically, they want to know, you put a number here for average monthly payroll, how many employees was that covering? Okay, so we're not going to get uptight about, very exact. Something has to be substantiated. If you say, well, which payroll should I look at if I'm working with 12 months? Sometimes I had this many, sometimes I had that many. Should I use the highest number? Should I use the lowest number? Again, I really don't think this is something you have to, as long as it's reasonable and you can document where your numbers came from. Of course, you could run that question by your lender, but I wouldn't advise that you stay on hold longer than it would take to submit your application. The important thing is now to get the applications in and to have documentation, reasonable documentation that backs up your data. And of course, do check with your tax advisor. What if you're a self-employed individual? So the minimum you put here is 1. You can't put 0. You can't leave it blank. You have to have at least 1 employee. So self-employed with no other employees would just put down 1 in this blank. Then they ask you to indicate what's the loan for. So we know that you can spend it for payroll. We know that you could spend it for rent and mortgage interest, and we know that you could spend it for utilities, which includes telephone and internet costs. The new boxes are all new. They are expanded under the new act, under the new law. We'll talk about this in a future slide a little bit further on, but basically it's your operation expenses, your supplier costs, property damage that was sustained due to public disturbances in 2020 and not covered by insurance, and worker protection expenditures, such as having to modify your plant in order to meet safety requirements or provide employees with PPE. That is the first draw application. What about your second draw? So guess what it's called? It's also called the 2483, but this is the SD. SD stands for second draw. Again, they don't really state the number clearly here on the face of the form, but just if you want to be able to refer to it, it's the 2483 SD. And it's also a one-page form. It contains data at the top, and then it's followed by questions and certifications. 1 question less than the first form. Only 8 questions here, not 9. But the important thing for us to zoom in on is the data portion at the top. So the top is the same, all this expanded availability to more and more types of businesses. We'll talk about in a little while those businesses that are still not eligible, but many are. The average monthly payroll, the same idea and the same questions really. Should you be using 2019 or 2020? Seasonal employers get the same ability to use 12 weeks. New businesses actually have a different instruction. For first draw loans, new businesses have been told to use January, February 2020. When it comes to a second draw, not sure why, but SBA changed their tune a bit and they said new businesses should just use the months that they've been in business. So if you were in business for 5 months, use 5 months and divide your number by 5, and cap every employee at $100,000 prorated over 5 months. That's what they're saying for second draw loans. Here we have something a little different. You're multiplying your average monthly payroll by 2.5, but if you're in code 72, again, that's food service or accommodations industry, then you actually get a higher loan. They're trying to get the funds where it's needed the most. Then you can multiply your average monthly payroll by 3.5, not just 2.5. And that will be your loan request amount, not allowed to exceed $2 million. And how do you know? What if you're in many industries? Well, if you've switched, if your NAICS code on your most recently filed IRS return is 72, then you're eligible. That's what they're going to look at. That's the proof they're going to want to see, your most recent IRS return, whatever it may have been. If you're filing there under a NAICS 72, then you are eligible to use the 3.5 factor, not 2.5. This is, again, one of the modifications that you'll see, those of you who are with us at Viventium. There will be a factor that you can select when you run your report, either 2.5 or 3.5. And again, the same thing, number of employees is basically just for reporting statistical information. The minimum there is 1. The costs that can be used for are all the same, and you're supposed to check all the boxes that apply. So, go ahead and if you plan to use it, there's a possibility that you may use it for all of them. Go ahead and check all of them because that's the purpose of the loan. You have to give your first draw loan number. Remember, they're going to require a certification that all of your funds of your first draw have been used for qualified PPP costs before the disbursement of your second loan. And now there's a new requirement on the form, and that is what we mentioned before, the 25% gross receipts. Before, in the first draw loans, all you had to certify was that you had an economic necessity for the funds. You didn't actually have to document that you had a decrease in income or in revenue. Now they are being stricter with second draw, and they're saying if you want the second draw loan, you have to show us how 2020 relative to 2019 had at least a 25% decrease. If your loan is $150,000 or less, if that's what you're applying for, then you don't have to fill this out right now, but eventually, before you get forgiveness, we are going to also need to see your at least 25% reduction. It's kind of pushed off. I think the feeling here and the thought of SBA is why not just get it over with, and why are we pushing it off? I think the feeling is twofold. Number one, we want to make sure the smallest businesses get their funds quickly. And if we're going to make them start looking for documentation of prior year, it's going to slow down their applications and they may not have easy access to their funds. So that's one reason. Second reason, I'm speculating based on the intent, the stated intent of President-elect Biden, that all of this aid and relief is only a first course, or as he called it, a down payment, and more will come. And I'm thinking that SBA is probably in the space that they're saying, well, maybe this 150,000 and down borrowers, maybe they're not even going to have to show a 25% reduction. So why should we bother making them submit all that right now? We will push it off until the point that they will seek loan forgiveness. So those are just conjectures. But as it says there right on the face of the form, that you can leave it blank now if you are 150,000 borrower or less, and we'll worry about that when we get up to forgiveness. Now we're going to take a closer look at this. First of all, they want you to designate 1 quarter in 2020 and 1 quarter that's called the reference quarter in 2019. And they have to correspond, meaning if you pick a 3rd quarter in 2020, then you have to be referencing the 3rd quarter in 2019, and you have to report the gross receipts, which we will define. Congress didn't define it, but SBA did. You have to report the gross receipts for each of those quarters, and you have to show that the decrease was at least 25%. Now we'll see that you have a few options about how to go about doing this. Now at the bottom here, you just have your, anyone who is a more than 20% equity holder, if the applicant, has to be listed here. Okay, I want to focus on this 25% decrease rule and how it works. First of all, in the situation that your loan is 150,000 or less, you leave those boxes on the form blank, and you're just going to do a certification now and documentation later. However, line 2, if your loan is more than $150,000, then you can either pick 2 quarters, one in 2020 and one in 2019, or if it's easier for you, you can just write annual. Instead of writing a quarter, let's go back up for a second, instead of right where you see here where it says 2020 quarter, you can actually just put the word annual, annual and annual. And then you can just attach your tax return, your most recent annual tax returns. You don't even have to go into the detail of quarterlies. It's easier for you to work on an annual basis, and you can show the 2020 compared to 2019 had gross receipts of, that went down by at least 25%. Now that's well and good if you were fully in business in 2019, if you were fully in business in 2020. What about if you were in business only in 3rd and 4th quarter of 2019, not in 1st and 2nd quarter? And yet you're saying to yourself, yeah, but my biggest decrease was in 1st and 2nd quarter 2020. And they're not going to let me use it because I wasn't in business. There was no corresponding quarter in 2019. So SBA recognized that problem and they said, it's fine. If you were not in business in 1st and 2nd quarter of 2019, only 3rd and 4th, then you can still take any quarter of 2020 and compare it to 3rd quarter or 4th quarter of 2019. In other words, we're not going to make you lose that. If you suffered most in 2nd quarter, let's say, of 2020, and that was a 25% decrease compared to even 3rd quarter of 2019, then even though it's not the corresponding quarter, go ahead and use it because you weren't in business. And how do you establish it? Again, there was some misinformation out there. One of the large information services was saying that you should provide your 941s, but that's not correct because 941s are not an indication of gross receipts. You want to be providing either your quarterly financials or your bank statements. What if someone was in business only 4th quarter of 2019, not in any of the 3 quarters earlier? So then they're being flexible and they're saying you can take any quarter of 2020 and compare it to just that 4th quarter of 2019, again, with documentation of the financials of the bank statements. And as a matter of fact, what if you weren't in business at all in 2019? Now, remember, you have to have been in business on February 15th, prior to February 15th, in order to qualify for the loan. But let's say you just started up in January, right? You weren't around in 2019. Did that mean you can't get a second draw loan because you have nothing to compare to? No. They're saying you can take 2nd, 3rd, or 4th quarter of 2020 and compare it to 1st quarter of 2020. And if any of those later quarters of 2020 went down by at least 25%, you can still get a second draw loan. Okay, again, quarterly financials and bank statements have to back that up. Now, what is gross receipts? Gross receipts are the receipts into the business reduced by taxes that are remitted to others, such as sales tax, not reduced by payroll tax. You don't reduce gross receipts by your FICA or your FUTA employer taxes. And similarly, if your first draw loans were forgiven, that is not included in 2020 gross receipts. Forgiveness amount is not included. Okay, now I'll invite questions when we reach the end of this. I'm sure there are lots of questions about this, and hopefully I do see that we are heading in a good direction to have time for a good question and answer session. Now, despite all of the expansion, there are still a number of employers who are not eligible, such as household employers, any employer who had any type of SBA loan in delinquency, not just PPP loans. SBA grants other types of loans to small businesses as well. If you were delinquent on any of those loans or defaulted on any of those loans, you are barred from this new opportunity to get a PPP loan. As we mentioned, if you were not in operation on February 15th of 2020, you're not eligible. And of course, any company that has permanently ceased doing business or is in a bankruptcy proceeding is not going to be eligible because the whole purpose of the Paycheck Protection Program is to keep existing businesses afloat and to keep their employees paid. So if you're not in those categories, you're not going to be eligible for a PPP loan. I want to spend a couple minutes clearing up a misconception, and for those of you who weren't with us before, explaining a little bit about the coordination of the PPP and the employee retention credit. So we were used to the truism that if you took a PPP loan, you could not claim the employee retention credit. That's the way it was for 2020. However, in the law signed now on December 27th, there is a section called Section 206, which says that PPP and ERC can now mix. You can take the loan for employees on retention, meaning that you're paying employees even though they're not coming into work, or in some cases, even if they are working, if you're a smaller employer. And you can do that even if you do get a PPP loan. The only catch is that you can't double dip, meaning any wages that you put down for retention credit for an employee cannot also be counted when you go for forgiveness as PPP eligible payroll costs. That would be a big double dip, and they're not allowing that. Now, the misconception here is, what if you have an employee who was on retention for a few weeks and then went off retention? Either they maxed out or whatever reason, you took them off of retention. The wages that they got while they were on retention cannot be used on your PPP payroll cost report when you go for forgiveness. However, the wages that they earned when they were not on retention can certainly be used as PPP payroll costs. I want to be clear about that because I heard some people were getting a little bit mixed up about that. Or similarly, if someone's on partial retention, right? They had a partial reduction in their hours and you kept paying them. So you're entitled in certain cases to get a credit for what you're paying for the hours that they are not working because you reduced their hours, but you're paying them anyway. That would be a partial retention. So those particular earnings that are on partial retention are not eligible to be included in payroll for forgiveness, but the amounts that are not being reimbursed through a retention credit are certainly eligible to go on a PPP report. And the big thing here is card number 3. Retroactive employee retention credit is now allowed. You can go back. You can review your payroll records all the way back to payrolls beginning after March 12th, 2020, and you can reclassify employees and you can say, wow, I didn't know that I could get a credit for their wages because I had a PPP loan. I want to go back and claim that credit, and you will not need to do amendments. Congress has said to the IRS, you find a mechanism, invent a way that employers are going to be able to go back, get a retroactive employee retention credit for 2020 without amending prior quarters. We anticipate that the IRS will release a revised draft Form 941 for first quarter 2021, and that on that draft form will be special lines for including employee retention credit retroactively. Now, we're not going to go into detail now on the expansion of the employee retention credit. I highly recommend whoever was not with us last Thursday that you get a copy of that, go to the Viventium.com webinar page and listen, because there are expansions to the employee retention credit in 2021, first and second quarter. Any retroactive credits, though, that you go back to March 13th and on in 2020, only follow the old rules, meaning you only get 50% of wages for employees as a credit up to the first $10,000 for the year. Looking forward into 2021, you'll be able to get 70% of wages for each employee on retention up to $10,000 per quarter. Now, there's a maximum of $7,000 credit per employee per quarter for the first 2 quarters. That doesn't apply. People keep asking me this question, and it's coming into Viventium a lot, and our service teams are fielding this. Are the retroactive employee retention credits also expanded to 70% and $10,000 per quarter? And the answer is no. The retroactive credits follow the old rules, 50%, and the maximum is $10,000 for the year, just to clarify that. Now, what we're going to do is run through, we discussed this last Thursday, but now in light of the new applications, I think we can look at it with different eyes. What are the 5 PPP changes? So the newly eligible payroll expenses, any amounts that you as an employer paid for employee vision, employee dental, employee disability, and that includes, if you're in New Jersey, you know, you're mandated to make an employer contribution to disability. That is included now as a payroll expense, and any employer contributions for employee group term life. Those are all called payroll expenses. And your payroll providers should be able to give that to you on a report, assuming that you've been tracking it through payroll. If you haven't been tracking those as memo codes in payroll, action item is you want to start tracking them, work with your payroll providers, partners to start tracking them in payroll. And that's going to count toward the 60% rule. You know how your forgiveness amount has to be at least 60% payroll? Well, this counts as payroll. It goes into the 60%. And since now all of these expenses that you've paid are newly forgivable, if you are eligible to increase your first draw loan amount, as we talked about eligibility before, who's qualified, this would be a good reason to consider asking for an increase in your first draw loan. Now, you may have noticed on the two forms we looked at, there's yet no provision there for how to increase a loan. It's either like applying for a new first draw loan or applying for a second draw loan. We don't yet have a form or a mechanism that SBA is giving us as to how to increase the first draw loan. Will they make a new form for that? Will they tell you just to send documentation to your lender? We're not quite clear. That's still a little bit nebulous how you're going to increase that, but it's definitely something you want to keep your eye on if you do have these employer contributions and you're considering increasing your first loan. In addition, a whole bunch of non-payroll expenses are also being included. So operations expenses, we saw them before up on the form. Those include amounts that you pay for payroll and HR services, products or service delivery costs, sales and billing, accounting and inventory tracking. Any operation type of expense is now an eligible PPP forgivable expense. Any property damage due to the 2020 public disturbances that have not been covered by insurance, any costs for suppliers that are essential to your operations or by contract that pre-existed your loan application, or for perishables, it could even be during your covered period. Any worker protection expenses, and this would be if you had to modify facilities specifically to comply with regulations of Health and Human Services, Center for Disease Control and Prevention, or OSHA, those three federal bodies, or PPE rather, for your workers. All of those you can now apply toward your forgiveness, but those are non-payroll expenses. So we said that your forgiveness amount has to consist at least 60% of payroll and only 40% of non-payroll. This is in the 40% umbrella because it's non-payroll related. But once again, these may significantly increase the amount that you can still get as a first draw loan. And it's a strong consideration for increasing your first draw loan amount. Change number 3 is a forgiveness change, not an application, not a loan application change. And that is that your covered period can run from the date of your loan till any time between 8 and 24 weeks after your loan date. It had been a fixed either 8 or 24. They've said you can do between 8 and 24, whichever comes out best for you, most forgiveness, except it has to be ending no later than September 30th, 2021. Exactly how that will apply to existing loans, we need to wait till we get the forgiveness forms to see. We're sure that it will apply, but we need to see what will that look like and how is that going to work. SBA has not yet released forgiveness forms. Right now they're focusing on just getting the applications in, getting everybody their money. So we're going to sit tight. It probably is a best practice at this point not to submit a forgiveness application. The applications will be changing. There will be new applications of all 3 types, the EZ, the regular, the simplified, everything will change. So it probably pays to hold off and not file for forgiveness until we get those forms from SBA. But what I would encourage you to do is when you're deciding on the length of your covered period, certainly those of you in Viventium can run at your discretion, no charge for any of this, run your payroll reports as many times over and over again using different scenarios between 8 and 24 weeks to see which one yields you the highest forgiveness. And those of you who aren't with Viventium, you'd want to check with your payroll partner, how can I do this? How can I run mock-up scenarios to see which covered period length is most beneficial to me? Forgiveness is being simplified, not for $50,000 and down as it is right now, but it's going to go up to loans of $150,000 and down. It's going to be a 1-page form, no documentation, which is kind of interesting because Congress said no documentation, and yet a few breaths ago when we were looking at the 25%, we were saying that if you have a 25% decrease and you have $150 or less than $150,000 loan, you will have to submit documentation of the decrease at the time that you apply for forgiveness. So that seems to be a little bit of a contradiction between SBA and the congressional mandate, unless SBA is saying, well, Congress just meant no documentation of your wage reductions or your FTEs, but they didn't mean no documentation of your decrease of 25%. I don't know. I'm not going to get in between SBA and Congress, but at this point, we're waiting to see what these simplified forms are going to look like. Congress had even said that between $150,000 and $2 million, documentation wasn't going to be required, only certifications. We don't know what SBA is going to do with that yet. They have to kind of put it in their pipe and smoke it and see what kind of applications they're going to issue for forgiveness. So right now, the action item is to take no action and to just wait for these revised forgiveness forms. And they'll also contain a little bit more of a technical extension. If you had reductions in your wages or your FTEs during the period of February 15th to April 26, 2020, you could restore them by a date that you would designate, and then you wouldn't be penalized. And that designation date had to be before December 31st. It's now been extended to September 30th, 2021. And once again, this is an opportunity to run mock-up scenarios in your payroll software to figure out, well, which date shows that I brought my wage and FTE reductions back up to their pre-COVID levels. Let me keep running the report with different payroll dates to see which one comes out with the highest forgiveness. What comes next? Well, all of the guidance that we've been discussing today and that you're about to, ask me questions about, all that guidance is contained in the interim final rules, 2 interim final rules that have been issued by SBA, as we mentioned, and they're really still in the comment period. So if anyone does have comments that they want to submit to SBA, you have 30 days after the publication of the rules, which was on the 6th of January last week. And there's an email address there to submit comments to with these 2 SBA guidance numbers in the subject field. We're waiting for forgiveness forms. New 3508, 3508EZ, and 3508S. We're waiting for instructions on those forms and rules on those forgiveness forms to be issued. Right now, the focus, I think everyone's priority, is just to get your loan applications in, whether it's for a first draw or an extension or an increase, or it's for a second draw loan. That really should be first priority right now. Forgiveness should be on the back burner for a little while. And now we have not quite 10 minutes left. But I'm going to try to address some of your questions and answers. Again, the slides and recording will be made available to you after the presentation. Also, just want to point out that when the webinar is over, you'll be asked to take a very brief 1-question survey to provide some information that will hopefully help Viventium serve you better. So I'd appreciate it if you can include the answers as you leave the webinar. Okay, questions. If we weren't in business in 2019, but were in business on the required February 2020 date, do we still qualify for a second draw loan? So the answer is yes, assuming that you've already taken a first draw loan and used up all of the first draw loan funds, and assuming that you have 300 employees and less, and assuming that you meet the 25% reduction rule. So how does that apply if you weren't in business in 2019? It means you're supposed to take either the second, third, or fourth quarter of 2020 and compare it to your first quarter of 2020. And that's what you use to see if you meet the 25%, at least 25% reduction rule. If you meet all those, then yes, you can still qualify for a second draw loan. Next question. One of the qualifications for a second draw PPP loan is that the borrower had to have spent all the proceeds from the first PPP loan. Even if all of the money was spent on eligible expenses, does that mean a borrower won't qualify for the second round if there isn't full forgiveness, meaning less than 60% was spent on payroll? Excellent question. And the answer is no, it doesn't mean that. In other words, as long as you spent the funds on qualified expenses, even if you're not getting full forgiveness, and there's many reasons that you couldn't get you might not be getting full forgiveness. Let's say only 50% was spent on payroll and 50% was spent on non-payroll expenses. So now, does that mean that, well, okay, let's modify that. I may have misread the question, yeah. Certainly we know that even if you didn't receive full forgiveness, in other words, let's say you had FTE reductions or wage reductions, so you didn't get full forgiveness, but you used up all your funds on qualified expenses, you can still qualify for a second draw loan. You don't have to have gotten, I thought that was the question first, you don't have to have gotten full forgiveness, even partial for forgiveness, but you use the funds on eligible expenses, then you are still eligible for a second draw. The specific case where you have used for less than 60% on payroll, the answer is I don't know yet. So it's a very good question. If you use, let's say, 50% on payroll and 50% on rent and utilities, is that called using on eligible expenses, and would that qualify you? I'm not clear on that yet, and that would require further analysis of the guidance. But certainly if you had other reasons that you didn't get full forgiveness, either due to your wage reductions or your FTE reductions, yet your funds were used on qualified expenses, you could still get a second draw loan. Question, well, this is kind of something that's a prediction, but do you think EIDL will be forgiven? We already know that the EIDL advances do not have to be repaid. So if the question's about advances, that's clear, they don't have to be repaid. The rest of the loan, I don't want to weigh in on that. I don't know what to say about that. Next question. If we got 2.5% in the first round, are we still eligible for the second round? So I think the question there is, if we got 2.5 times the average monthly payroll in the first round, can you get 2.5 again in the second round? Yeah, I mean, the factor of what you applied for in your first round is not really a determinant of what's going to happen in your second round. As long as you've used up your first round funds before your second disbursement and you meet that 300 threshold and you meet the 25% decrease, then you're going to be eligible for a second round. Okay, here's another question. We got a first draw PPP loan. How do we apply for an increase of that amount due to costs that were not included in our application in April of 2020? Yeah, that's an excellent question. I would like to know the answer to that too. As I mentioned, we have two forms released by SBA. One is for first draw loans, first time around, and one is for second draw loans. We don't yet have any form or mechanism that they've introduced for expanding. And I know that's going to be something that's very important to many employers, very significant to many employers. And we're hoping that SBA will very quickly clarify and put that into place. So yes, thank you for that question. And it's really a question that we all have right now. Here's a question about forgiveness. Well, I'll take a stab at it. One of the safe harbor FTE calculations is that FTEs at time of forgiveness application. For the first PPP loans, how does that apply when the forgiveness application is done after December 31st, 2020? So again, so we're in a situation, I'm just trying to understand the question. We're in a situation where you have a first draw PPP loan and you're now applying for forgiveness after December 31st. And you're trying to show that you restored your FTE count. And there's a safe harbor that if you restore the FTE count by the time of the forgiveness application, then you won't be penalized. Your forgiveness won't be reduced. Okay, so the answer to that question is, as we mentioned before, the December 31st deadline for that FTE safe harbor has been extended by the new law, and the deadline is now September 30th, 2021. So as long as you are applying for forgiveness and you have restored your FTE counts before September 30th, 2021, then you can use that date. That was an extension under the new law? Thank you for that question. Good question here. When is the first loan forgiveness loan application due by? So again, we haven't gotten updated forgiveness information, but there's no reason to think that it's going to be due any sooner than they've already stated. And they've said that you have basically 10 months from the end of your covered period. So we still have plenty time. Most employers still have plenty time to get in that first application for forgiveness. Question, does it apply to home care agencies? Yes, certainly home care agencies that meet the criteria that we discussed, the 300 employees and down, then, you know, a smaller agency can go for a second draw loan. And the first draw or the increased first draw certainly applies to home care agencies. So yes, that would be included. And we have time for just one more question before we finish for today, and that is, can you increase the first draw and then get a second draw? So the answer is theoretically yes. In other words, if you're entitled, if you have monies that you can put in to increase your first draw, then you could go for it. But you can't get the second draw till those increased monies are used up. Will that happen before March 31st? Maybe, because maybe these are expenses you already spent, and that's why you're increasing your free. So it'll certainly be used up because you spent it already, but it may take time. And will there be funds left in the second draw program? Well, no one really is able to predict that. So it's kind of like, you know, discuss this with your tax advisor, because maybe you just want to jump right into the second draw. On the other hand, it would be a shame, you know, if you could get both. So it's something to be weighed and discussed. I want to thank you all very much for your participation today. Again, encouraging you to reach out to the Viventium.com solutions page, the COVID-19 solutions. And of course, those of you who are Viventium clients, I would encourage you to visit frequently the VCUC, the Viventium Coronavirus Update Center. Lots of good resources, links, and information there for you. And please do take a moment to answer the one survey question at the end of the webinar. And I want to wish everyone much success in securing the highest possible loan funds, and of course, subsequently in forgiveness, and hope to talk again as more information emerges. Thank you very much and have a great afternoon.